right. Welcome to another episode of the KYC podcast, the Know Your Compliance podcast. I am excited to be back after a bit of a break here and excited to be having a conversation with Mary Gronkowski from DLC Mortgages. Mary's the National Director of Compliance. And that's, I think, a really fun job. Probably not for everybody, but so Mary, welcome to the show.
Oh, thanks for having me. And you're right, it's never a dull moment in the world of compliance, that's for sure.
Yeah, I have come to appreciate that actually. It's part of what I think is really interesting about this kind of a job where every day, quite literally, and we'll talk about this in a few minutes, I'm sure. Quite literally this morning, a change to the regs dropped, and we knew it was coming, but it's bigger than I was expecting it to be for a drop that's in effect 3 days from now or 4 days from now. So
yeah, March 1st.
Anyhow, yeah. So let's look today. From my vantage point, I get to work in real estate brokerages and in mortgage brokers, but it's very high level. And why I wanted to invite you onto the show is that you get a little bit more of the day-to-day questions. And the question I really wanted to explore today with you was, now that the mortgage sector has been a reporting entity for 4.5 months, how's it going? And what is that looking like? So, yeah.
Well, first of all, it's been a very slow process getting our brokerages registered as reporting entities. But FINTRAC has a systematic process, and there's a few that have already been signed up, but very, very few. So out of the over 500 brokerages that we have, there are now about, I would say around 20 that are officially signed up and registered. And their onboarding process has been very methodical. So they do send out an email just asking you to answer some simple questions. And then they send out a supervisory assessment questionnaire. And then based on that questionnaire, they will meet with the compliance officer or owner and go through any gaps and make sure that they have everything set up. It's been fairly simple and more of an educational process, which is really good. Not as daunting as we thought.
Okay. Oh, that's good.
Yeah.
I mean, I remember chatting with brokerages kind of in that, August, September period, and people were lighting their head on fire at one point. So
yeah, a lot of stressed out people for sure.
Well, it's actually one of the really fun insights that we've realized as we've worked more and more in the sector is that mortgage brokers in general are actually like very comfortable with and used to having a bunch of compliance in their lives. And so for one more set of compliance procedures, okay, they'll there hasn't been as much grumbling as we've observed in perhaps some of the other sectors we work in, perhaps.
Yeah, and you're right. We're very heavily regulated in each province, and we have to have compliance, and even ID verification that was already baked into a lot of our mortgage broker acts across provinces. But yeah, it has been a little bit overwhelming just trying to get all the processes in place because there's just so much involved, right?
There is, for sure. And it's a whole new language for most of the DIs. It's a whole new language, right? Like it's
That's
just
right.
They don't speak FINTRAC.
Right. We have a lot of acronyms on the mortgage side, but I can't believe how many acronyms there are on the FINTRAC compliance side. It's incredible.
I've joked whenever I go to AML CTF conferences, anti-money laundering, counter-terrorist financing conferences, we actually joke about how many acronyms we're throwing around all the time because it's
mind-blowing.
It really is heavy. Yeah, exactly. So I thought it'd be interesting. I'm glad to hear that it's that the general view is that it's going well. What I thought would be really interesting for our listeners would be to do a bit of an exploration on what the tales from the trenches, some of the pain points that we are starting to see, and maybe ideally some patterns of the pain points, because I think that would be the most helpful for people. Now, you and I had talked a little bit off air, just kind of listing out a few. So was there one in particular you wanted to start with? Yeah.
Yeah, well, situations are popping up now, right? And they're difficult to respond because we're getting a ton of questions. We're trying to help our brokers, our compliance officers as much as possible and give them proper advice. So there's one situation that came up, and it came up a few times, where a client name was found on a UN
Mm.
sanctions but cleared Canadian sanctions list. And this has happened a couple of times. And the broker working with the client, it was a past client that they had initially worked with at the bank when they, when they were an employee at the bank. So they've known this client for quite some time, and they're providing all sorts of documentation and getting extra ID. How do you then verify that this is not the same person? Because the name had a very similar name. Let's say sort of like a John Smith.
Sure. Yeah.
And this name
Yeah.
was very common. And how do you proceed in that respect? How do you prove that this is not the same person, and how do you allow the broker to go ahead with the transaction?
Yeah, it's an interesting question because it's something we get on our system with our users frequently as well. Well, frequently, no. Fortunately, we don't have that many hits on our various lists, but it comes up with some regularity. And I guess conceptually, and I don't know in your particular case, or in that broker's particular case, what lists, how they were accessing the lists, but for the list to be useful, you'll need to be able to have access to personal information of the sanctioned individual. So frequently, birth date is available. Frequently, occupation is available. Sometimes you'll have some of the lists will have aliases, or actually all of the lists will have aliases built into them. And so what you're trying to do is disambiguate using some of those other characteristics. Birth date is the most obvious and the easiest one. If the person you're sitting face to face with has a different birth date, well, look, we've got a really good answer. But it's going to the next level of not fuzzy of fuzzy matching, and conceptually that's the challenge we're all up against. The story I like to tell is there is another Greg Dent. He's there's actually two other Greg Dents that I know of. One's a bodyguard for Taylor Swift. And one's a football player in Florida who was accused of sexual misconduct.
Oh, no.
Now, yeah. Now, I'm neither of those Greg Dents. There's the easiest way I know that is because our birth dates are vastly different. And so fundamentally, that's the first thing. Now, if you were to push me and say, well, what if the birth dates are the same? I think if the birth dates are the same, I would probably not want to move forward with the transaction, to be perfectly honest with you.
So. Exactly. So we do need to find out what other characteristics showed up, not just name, but date of birth. Would a sanctions list also pull in social insurance number, or no? That wouldn't be something that it would capture.
I haven't seen it. It's not to say it wouldn't necessarily, but it depends on the granularity of the data. Some of the challenge, of course, is that how your provider or whoever the provider of the list is for you may choose to expose certain amounts of data or not. So we and frequently there are rules around the amount of data they're able to provide, specifically because you don't want to make it easy to circumnavigate this either, right? You can well imagine the John Smith who is on the terrorist watch list would probably like to be able to buy and sell and do and move their money. And if they understand the data points that are being used, quote unquote, against them, then they're going to be able to try and circumnavigate them with fake documentation or whatever.
Right.
So,
yeah. No, that's interesting. We also had a recent situation where the borrower provided fake ID. And then we got actual real ID. But the fact that he provided fake ID sounded all the alarms, and red flags went up, and now they're looking at doing more due diligence on the file, finding out why was this fake ID available. So a lot of different scenarios are popping up and raising red flags. Yeah.
That's a fun one. That's a really fun one. So the individual like accidentally showed the frontline staff member or the broker in this case
They actually
fake ID?
provided an ID, and this broker was smart because with driver's license in particular, each province has a website you can go to and enter the driver's license number, all the
Hmm.
identification number, expiry date, the name, and it'll tell you whether or not it is valid.
Hmm.
So I think that's, how they came across us. And then they confronted the borrower with that. And all of a sudden they got an actual valid ID. What do you do in that situation?
Crazy. Well, ooh, that's interesting because I think the fact that they attempted to use fake ID from a from a purely money laundering definition point of view is attempting to obfuscate their identity.
So that's
Um,
STR right away. That's
yeah,
an STR filing, right? Yeah.
I would then absolutely 100% to me. There's well, okay, I never say 100%, but there's a reasonable percentage that person should probably or that DI should be filing an STR based on that. I
Right.
would suggest that I'm not sure that that's enough of a weird situation as a business owner. And
Mhm.
this is me taking off my AML CTF hat. This is me just looking
Absolutely.
at it as from a risks point of view. I'm not sure I'd want to continue working with that individual. Because
Mhm.
there's now evidence that they're I mean, look, let me put it this way, Mary. Do you have a piece of fake ID? I don't mean to put you on the spot, but the answer for me is
No,
no.
no, no. Maybe when I was
And
17 or 18.
yeah, okay. I
University
mean, I
days. No, I'm
I'm
kidding.
not going to tell whether I did or not then, but certainly at this point in my life, that's just not something I use,
Yeah.
nor would have any reason to own. And the very fact that they own that to me raises enough of a red flag as a business. And
Hmm.
it's not even, again, it's that I'd be worried about what else they're trying to do. And
Right.
keep in mind, um, if we go to like the core of what we're doing here, anti-money laundering is important because we help prevent criminals using the legitimate money system to bring their proceeds of their crime in. But it is actually also just illegal to assist in money laundering.
Period.
And
Yeah.
period. Like ignoring your FINTRAC obligations, like if you are asked to help somebody launder money and you say yes, you are breaking the law.
That's right.
And and to me, what's interesting about this particular scenario is that might be enough of a red flag that I would just not want to be involved because the risks of
Yeah.
assisting with money laundering are too high all of a sudden.
Right. Right. So you can understand these are the type of questions I'm getting. And so
Hmm.
it's really trying to make sure that they understand the overall picture, right? And what their responsibilities are in this case, right? Yeah.
Yeah, no, totally. Pretty fun. Pretty fun.
Like I said, never a dull moment.
Yeah. One of the things that I've seen come up on my side and has been kind of entities and whether those entities and we were talking a little bit that uh, most of the time that's going to be a corporate shell. Frequently it's a hold co that they've established, and that's pretty usual. But I'm our support desk right now is in a conversation with a mortgage broker around a trust, and I don't know if it's a family trust or a business trust or whatever, but similar kind of concept. The
Mhm.
core of the question is getting to that beneficial ownership piece, and have you been finding that that's been difficult for people to wrap their head around? Because I know we certainly have been seeing a lot of questions on it.
Well, with our professional commercial mortgage brokers, experienced mortgage brokers that deal heavily with corporations, partnerships, trusts, they already know that they have to identify beneficial ownership. So they get it and they understand it. And, anyone owning 25% more or more in shares are considered a beneficial owner, right? So, and they understand what sort of documents they can get. So it's not just identifying who the beneficial owners, from what I understand, it's also confirming the accuracy of what they gave you, right? So
Yes.
articles of incorporation or shareholders agreement, partnership agreement, whatever that is. And in your situation, the trust, there's got to be documentation that we can get as
Mm-hmm.
well. But
Yeah.
the residential brokers that come across a commercial deal every now and then may not be
Mm.
experienced at asking those type of questions and drill down deeper into who are the actual owners of this company. Because from what I understand, and correct me if I'm wrong, but 70% of the, if not more, I heard a really high number of money laundering is done through corporations. Through
Yeah.
these,
I mean, I don't know about the stat.
that's what I
But that sounds directionally, that sounds right. Which is to say, like, the it is much easier for someone to launder money using various shells, and that's actually like it. It almost sounds silly to say it. It's so obvious because the concept behind laundering money is that you want to not be able to be identified because by definition,
That's
you've
right.
been involved in criminality and are trying to get the funds in. So
Yeah.
as many corporate shells and trusts and partnerships that you can kind of layer that into to hide who you ultimately are is exactly what I
And
guess what I'm
we've
saying is you're probably right on the number.
yeah, and you know what? We have a huge gap in the mortgage industry. We have a learning gap on that
Hmm.
side of the business. You know, we don't have really good training on these type of transactions, commercial transactions. We're very limited in terms of education and knowledge in that. We've got some really good experienced commercial brokers that I would love for them to put together a course because it's a gap in our industry for sure.
Yeah, that's interesting. We've been, I mean, look, I think we've been seeing a lot of the same questions, but we've also been seeing a lot of the same questions prior to October from the real estate sector, which has kind of the same education gap where,
Mm.
you know, a realtor just doesn't necessarily understand what a corporate structure is because it's just not part of their training. That's the lawyers
No.
get that kind of training.
Yeah.
Um, and what becomes really complicated and why it's a really difficult nut to crack is that each province, I'm going to take this bigger. Each jurisdiction, because there are nationally registered corporations, there's provincially registered corporations, then you get into the states and it's a whole different framework. But each of them are going to have differing levels of documentation
Right.
with really problematically different names, even though sometimes it's the exact same information on these two different forms. So,
That's right. And they may not know what they're looking at. So some of our experienced commercial brokers approached some of our regulators and said, listen, we need a
mm,
different, separate licensing classification and education and requirements for commercial mortgage brokers. And I have to
probably
agree with
true.
that. You know, that
Yeah.
there it's a different level of knowledge, and it would be good to have a separation between the two.
Well, you're absolutely right. But the challenge that we face is that, as you quite rightly said, there are some residential mortgages that are set up in corporate shells as well. And, there
Hmm.
are, and
Hmm.
so unfortunately, even the residential brokers, sorry, um, need to have enough of an understanding, enough of a cheat sheet to
Right.
navigate their way through how to identify the
Good point.
corporation, the trust, the not for
Mm-hmm.
profit. That's another one that kind of falls into that category of weirdness.
Mm-hmm.
Um, so yeah, yeah. Well, and for what it's worth, we do have some resources. They're not bad. They're okay. They're good. Okay, I'm gonna say they're good. But that we do have some resources to help with if people wanted to reach out. We're certainly happy to share that for sure. So, um, okay, and then I guess so. The other thing that we had talked about was IDV and dual process, and ultimately IDing clients, quote unquote, properly.
Mm-hmm.
Um, what have
Mm-hmm.
you found on this? Because certainly we've been having
Yeah.
some interesting conversations.
Well, with dual method, I think the confusion is, what would qualify?
Hmm.
So first of all, because we get a lot of documents, brokers think, oh, a T4 from an employer. I've got their name, address, SIN number. but an employer is not a reliable source. So
Hmm.
it's first understanding the documents you receive must be from a reliable source, number one, meaning government, provincial, federal government office, right? Crown
Yeah.
corporation or a bank or a financial institution, Canadian financial institution. So it's first identified, do I have a document from a reliable source? Number two, what many don't understand is that those two pieces of documents that are completely independent and separate must identify either name and address, name and date of birth, and name and bank or financial institution account number. So you
Yeah.
can't have two pieces identifying only one or confirming one of those items, right? So it must confirm two of the three, and then it's check, you got it, right? So it's not just having two pieces of documents like some brokers were thinking, and they can, and like I said, we get a lot of documents, but some don't qualify for dual method. So it's really
Yeah.
understanding what qualifies.
You've hit the nail on the head on this one, honestly, in my mind, because one of the reasons that we've been really reluctant to look when we write policy and procedure manuals, part of the conversation we're having with the compliance officer is what forms of ID verification are your brokerage going to be comfortable taking, and we generally try to encourage people away from including dual process for exactly because of the complexity that you've just identified. And it's just
Mhm.
the risk you run is, I believe the risk you've run is that when you don't ID somebody properly, you expose, well, you've reached your own policies. And so one of the rules that I try to live by when it comes to FINTRAC and FINTRAC compliance is whatever you say you're doing, you better be doing it. And
That's right.
if you say you're doing dual process, but you end up not doing dual process properly, you're actually going to get, I think you're going to get in more trouble than if you said, look, we're just not doing dual process because we can't understand the risks, and we can't manage the risks properly. And because that's perfectly acceptable. You're allowed to say, look, we don't accept dual process. That's not a thing in our
I think
world.
if
So, yeah.
Yeah, and I think if brokers have a really good process, for instance, there's a compliance file checklist that every
Mm-hmm.
broker has to check off and make sure they have in their file in order to get paid your commissions. It goes through an audit process. So on
Yeah.
that checklist, if you are using dual method, you should check off which forms you're using and which of the three
Columns.
categories did.
Yeah.
If you have a really good checklist and you're checking off the boxes, it's also a training tool because it's reminding them, okay, if I have a notice of assessment and a property tax bill, that's only confirming name and address, so I can only use one. So I think it's just having the right process, the right checklists, and making sure there's also training, good training as well, because you have to understand, on the broker side, we do get a lot of paperwork. Unlike the real
Oh, for
estate
sure.
side, we deal with
Oh,
a lot. Like for a refinance, on almost every refinance, we will have to get the bank statement, right, and a property tax bill. So
yeah.
both those together will qualify.
Yeah, no, absolutely. You are correct. I mean, I think the yeah, no, you're absolutely right. And I think a good checklist does solve for a lot. I like me a good checklist, and any to me, this is fundamentally the way I think we can help with compliance is by creating systems, and a checklist is one of those rudimentary systems that becomes really helpful and
Yeah,
helps with
something
that
that's
compliance for sure.
foolproof and simple. Yeah.
Yeah, yeah, yeah. We've seen on our side people leaning into the remote ID verification,
Okay.
and I think for what it's worth, I think that is probably. I guess it depends on what the objective is, but for what it's worth, I do believe that a good remote ID verification process allows for a lower risk of fraud. And I mean, look, we're talking about percentages here and all the rest, so small percentages. But I do think leaning into some of the tech out there on this stuff is really helpful, particularly if you view if you
Mhm.
consider the risks associated, and lowering the risks being an important part of all of this process.
Yeah, it's crazy. It's the IDV is great technology. However, I'm going to tell you a story.
Yeah, sure.
Actual situation that happened to one of our brokers. This client of theirs was in a coffee shop, and this gentleman, just a friendly guy, started talking to him. They shared a coffee together, a donut. They became friends. They would meet regularly. They'd go, do other stuff together. They became friends.
Yeah.
The client ends up going on holidays, and this friend ends up getting access to his property with a key.
Mm,
I guess
mm,
he was watching his home for him. He became his friend. He got his ID, and he went to our broker for a mortgage and signed up and got approved for a mortgage as if he was this other guy who was on holidays, who he befriended. Anyways, the mortgage closed, and they even asked for ID. It was all done virtually, but they did IDV technology, and it passed. He
that's
had
scary.
physical ID. So yeah, it's happening. They're very sophisticated, these guys. Very, very
That's
sophisticated.
really that's interesting. I'd love to hear more about that story off air, because I mean, for whatever you're able to talk about, because that's IDV done properly does include a step that would have prevented that process, which is the matching between the person presenting the ID and the
Hmm.
ID itself. So I'd love to hear more about that.
Yeah.
Yeah, yeah. No, and I mean, look, it's an interesting story, and I've heard variations of that same story, not with good IDV use, but
Mhm.
but it is worth noting that there is always that element of risk for sure. One of the things that we had talked about, I mean, I guess here, let me ask the question directly. What is the next challenge you foresee? And I think I know the answer, but I'm going to cue you it that way. What do you think the next challenge that we're facing within the mortgage sector coming up now?
Well, we know that the next challenge would be this, this 2-year assessment of their entire business, right? And
I was
it's
hoping you'd get there.
it's mandatory, it's part of the compliance, but it's important to have a separate set of eyes on your whole process to reassess, are there any gaps, and making sure that you have corrected the gaps. And I can't see anyone else doing it other than a company that has the expertise, who's done this before and can provide the proper advice, because it's quite a vigorous process from what I understand, but I'm sure you'll tell us.
Oh yeah, no, it's a vigorous process for sure. I mean, not only is it a vigorous process, but I actually think, and I really want to highlight what you said, it's a really important piece of the puzzle, because it is, the way I like to look at it is, it's your free shot, and it's not free, but it's your free shot at a FINTRAC examination without the threat of the massive administrative monetary penalty, or a sanctions letter, or a findings letter with a bunch of action plans minimally. Just like, it is your opportunity to test your program without the guillotine of FINTRAC involved. And I think that's, to me, it really is an important piece of the puzzle, and it's something that uh, that the industry is going to have to start to kind of wrap its head around what that looks like. For
Mhm.
yeah, yeah, yeah.
We've got how
I
many
don't
months
like.
now?
Yeah, well, it depends on when they started. The people who actually wrote the program the day they were supposed to,
Mhm.
we're now 4.5 months in, so they have another 20 or 19 and a half months to start an effectiveness review. The people who haven't managed to put a program together yet,
Right.
they have a bit more time. They should probably get on writing the program, because they should have one by now. The I for what it's worth, I think what we've found on our side, and the mortgage brokerages that we're working with, um, the considering the whole thing as a system, and making sure that it works together, all of the pieces of the puzzle work together, um, really end up being valuable, in that it becomes a much
Mhm.
more flexible program. And I guess, actually, something we forgot to talk about when we were talking about it, but highlights why what I'm saying right now is important, is that the regulations changed. The area changes. So we were joking prior to the call, literally this morning, there was a fairly substantial change.
Yes. Yeah.
We should mention that. Well, fairly substantial. You know what? That's overstating it. But there was a change to the regs. Do you want to talk about that for a second, just to kind of highlight for people what that is?
Yeah. Well, it just came out this morning, and
yeah. And to be clear, I haven't read the guidance completely yet, so I don't think you have either. I don't want to put you on the spot too much, but
no, I wrote it down because I thought, oh my gosh, like this is big. I mean, it's a new reporting structure called Listed Persons and Entities Report, which is replacing the terrace property report, right?
Yep.
And from what I understand, it's reporting property in possession that is owned or controlled by or on behalf of a terrace group, listed person, or listed entity. And this property can be anything. It doesn't have to just be real estate, right?
Nope, it could be cash, could be art, could be a car, whatever.
Mm-hmm. Yeah. So I guess these new policies, these new guidance that are coming out, brokers have to amend their current policies to reflect these additions, right? There was also a list of new terrorists. Did you see the list of the new terrorists that's added on? So from Venezuela and Mexico, and these new, they're not new, they're drug cartels that should have been on the list a long time ago.
Probably on the list. Yeah. Yeah, no, and I think what you've just touched on, and I want to just double click on it for a second, because it's really important to hear. Both of those two changes means that somebody, whether it's a service provider, in our case, doing it for you, or you as a compliance officer doing it yourself, somebody had to go through your documentation and make all of the changes to make sure that when your program is audited, either by FINTRAC or by your effectiveness review, you don't have a reference to a terrace property report, because that's not a thing anymore as of March 2nd. Now, look, there's some grace. If you were to get an examination notice on March 4th, it would be perfectly reasonable to not have everything in place. That would be, this isn't a, boom, guillotine hit. But if FINTRAC comes in 6 months from now and you haven't made any effort to change your documentation, they're not going to be as comfortable with that.
Well, the other thing, Greg, is we've encouraged our broker owners to subscribe to FINTRAC's communications, because otherwise they won't even see that communication that came out this morning. So for those that have not subscribed to FINTRAC's newsletters and notices, you better definitely get on there, because you want to know what's going on and what changes you need to make, for sure.
Please. It's, I mean, look, for people within our database, we regularly publish videos, and whenever FINTRAC issues something that's relevant, we'll make a point of kind of doing a bit of an analysis on it. But if you're not on our list, by the way, our lists are free. Like, you can sign up. Just let me know. We're happy to put you on those lists. But for people who aren't on our lists, making sure you're on the FINTRAC list yourself is a really important step, because all of the changes, they do publish them. They are making people aware, and you're expected to know what's going on. You can't claim ignorance. That's not, unfortunately, a thing.
Yeah, so. I know. And they get bombarded with emails. So it's good to have one person that's really on this, your AML compliance officer, who's watching these emails, making the changes to their policies. Yeah. It's I call it the beast. Beast, right?
I live and breathe in this beast. It's a lot of fun, I say. So, well, Mary, I really appreciate you taking the time. I think this is the kind of conversation that I think is really valuable for anybody who's listening. I suspect most of the people who are tuning into this episode will be mortgage brokerages, I hope anyhow, who can find some value out of this, because there's a bunch of tidbits that you've shared with us that I think they can take to heart if they're not currently doing. So, yeah.
Well, thanks for having me, Greg. This was fun.
Wonderful. Thanks. Have a wonderful day.
All right. Take care.
Thanks for tuning in to another episode of the Know Your Compliance podcast. If you'd like more information about our guests, have a story idea, or want to be a guest, please reach out to hello@kycpodcast.com. If you want to discuss your anti-money laundering compliance needs with a member of the Really Trusted team, go to www.reallytrusted.com/consult.